We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Doug Casey, founder of Casey Research, author of several books, including Crisis Investing, Assassin, and Speculator, and also the International Man blog. He also has a YouTube channel entitled Doug Casey's Take. How are you today, Doug?
Very well, Tom. I'm speaking to you from the shores of the Chesapeake Bay, where I'm going to be spending the next several months.
Excellent to be able to get to speak with you today, Doug. So I'd like to start off by kind of getting your thoughts about how you think that young people should spend their time. You've said in the past that they should concentrate on, really gaining knowledge, experience, traveling, building skills, and making connections. So why are these particular things so important to you, and how does one go about building them?
Well, as I may have mentioned the last time, when I was on the Phil Donahue show the day before the national elections in 1980, when Ronald Reagan ran against, I forget who it was even. And the audience generally liked me, except for two things that I said that they went wild, booing and hissing. One was I told them they shouldn't vote the next day. They didn't like that. But even worse than that, they disliked it a lot when I said that kids shouldn't go to college. I said it was a misallocation of 4 years of their time and a whole bunch of money. And in real terms, it's much more money now than it was back in 1980 when I said that. But I think more people have come around to the view that I put across then, that college is at best a misallocation of time, unless you want to learn a technical skill, a trade, where you need paper, a diploma on the wall to allow you to do that, doctoring, lawyering, engineering, lab sciences, fine, that makes sense. But very few people go to college for anything as specific as that. Most take liberal arts, or worse than that. They take actively destructive and stupid things like gender studies and related subjects. So the question arises, well, what should you do when you're age 18 with that 4 years of time? You just don't want to lay around on the couch in your mom's basement and play video games. Actually, I'm very tempted to write a book talking about exactly what you should do with that 4 years of time. And sometime before and after that, besides, there's no reason to put the arbitrary limit of 4 years on it. There are lots of practical hands-on courses that are of practical as well as theoretical value that you can take. For instance, there's one company that over a period of 3 months will teach you how to build a house, everything from soup to nuts. Now, that's a valuable thing to know how to do, to actually do it, okay? But building a house is just one thing you can do. I mean, you should be doing this all along. Starting in high school, you should learn to become a skilled scuba diver. You should learn to become at least a private pilot. You should, there are courses available in everything. And going to college is just paying them a huge amount of money to have your mind filled with generally corrupting Marxist ideas. So I'm going on too long here, Tom, but you asked a question. I was a trustee for the 10th oldest college in the US for 5 years. And it was a disgusting experience. The administration and the professors, even then, and this was 25 years ago, were all very woke oriented. And this was before wokeism became a national hysteria. huge waste of, say, $300,000 of money in 4 years of time to be actively corrupted and have your mind cluttered with all kinds of ridiculous and phony ideas. So that's scratching the surface of the answer.
So, Doug, as we talk about education, after our last interview, I read Speculator, and in it, Charles Knight takes a trip to Africa to learn all the intricacies of speculating on a gold exploration project. So, what do you think is the best way to go about really learning and understanding speculating in the gold mining space?
Well, there's two areas. One is theoretical, and the other is practical. The theoretical part should be part of a broad general education. I mean, you should learn a lot about things like chemistry and geology, and learn something about mining engineering. I mean, exactly how do you get this gold out of the ground with big yellow machines? I mean, exactly how does that work, and how do you process it? So there's lots of technical academic things that it's very helpful to learn about when you're going to speculate in gold stocks. But the other part is the people kind of part of the business. It's because people are by far out of the, I put together something that I call the 9 Ps, a mnemonic to help you remember what you should look at when you're looking at any mining stock, or for that matter, any kind of stock. They're all P's. It's supposed to be a mnemonic to help you remember them, but 2, 3, many, I can't remember all 9. It's perverse. But the first P, which is far more important than all the other P's put together, is people. And so it's important to learn to judge people. You've got highbrows and hipsters and starlets and phony tipsters, all kinds of people in the business. And one thing I've learned is good people make for good business. Bad people make for bad business. So I really try to stay away from what I consider bad people. So stupid people. There's plenty of stupid people out there that have a social veneer that make you think they're at least passively smart. But once you scratch below the veneer, you find that may not be true. So that's what you should do to learn about mining. After people is next is property, and after that is financing, spelled with a PH. Where are they going to get the money? How are they going to structure the deal? Paper. Who owns all the stock? All kinds of things like that. Politics. Where is it located? The mine. The wrong jurisdiction, whether that be a state or a province or a country, makes all the difference in the world. So push. That's another one. What's gonna make this dog run? What's the catalyst that's going to take the stock price up? There's lots of things to consider.
So, Doug, when we think about once you've made that decision to invest in let's say a particular gold company, how do you think about de-risking from maybe more of a technical perspective, de-risking the stock that you're interested in?
Well, what I do, and this is not necessarily available to everybody in the general public, is I prefer to speculate only with private placements. In other words, if you think a company's got good prospects because it passes the 9 Ps, okay, you can call your broker and buy it in the market. That's fine. But a smarter way to do it is to get to know the management of the company, which you should do anyway. And it's possible with these small companies. It's not possible with General Motors or Apple. You'll never get to know the managements of those companies. But I only like to invest with private placements. All these mining companies, well, if they're not, unless they're in production and are profitable, they're all black holes for money. They always need more financing because they have expenses but no income until they hit the mother lode or whatever. So they're always raising money, and that's the way to invest in them. Because when a private placement is done, you buy your stock at a discount to the market, typically 5%, maybe 10, maybe 15%, maybe more. Plus you get a warrant, maybe a half warrant, maybe a full warrant, maybe for 1 year, maybe even for 5 years. So that's the way I put my money in the market. And then to further de-risk it, after the 4-month hold period, which is typical, I'll sell at least a portion of the basic position and hold the warrant as like a free lottery ticket. So that's a tip that should be obvious to people in the market, but not as obvious as one might hope. So pay heed to that.
So since you have experience doing this, Doug, do you feel that maybe this financing cycle has reached a bit more of a crescendo? There's a lot of these mining companies that have gotten a lot of money over the past, let's say 2-3 years here. And are you finding that these private placements are harder to come by at this point at an attractive, let's say, structure?
Well, that's a good question. When the market gets hot and everybody wants to own mining stocks for some insane reason, of course, the terms become less investor friendly. Where's the market at right now? No longer at giveaway levels, which it was some months or even a couple of years ago. But I'm still putting money into these deals. Why? Because the general market itself is in crazy territory. It's in bubble territory, which ought to make anybody suspicious. But nobody really cares still about mining stocks in general and gold mining stocks in particular. So as crazy high as the general market is, the mining stocks, even though they've gone up with the general market, because yeah, there are plays on gold or copper or whatever, but there are also plays on the stock market. They're stocks. Relative to the general market, gold mining stocks are, believe it or not, almost as cheap as they've ever been. Look, with gold let's say gold is at 1900, the average all-in sustaining cost, that's cost from soup to nuts and afterwards, to take an ounce of gold out of the ground is on average about $1,000. So if a company's in production, it's really making a lot of money. It should be making about $900 an ounce. And the price earnings ratios on producing mines, I mean, there's some out there that are selling for 8 or 10 times earnings. And as a gold bull, and I am a gold bull, that could go up a lot. There could be a bubble that blows up in the gold mining space the way there has been in a number of other spaces like the internet space and the crypto space and the tech space. So once again, long answer. I'm sorry about that, Tom, but yeah, I'm still buying stocks and private placements. Yes. So, but these aren't heirlooms. These are not things that you're going to want to hold forever.
Because at some point we're going to be in bubble territory in the gold stocks as well, right?
We will. And gold mining and mining in general, they're very cyclical industries. It's actually the most volatile industry in the world in terms of fluctuations of the stocks. More volatile than tech stocks, they're very volatile. So these are not lifetime holdings. Even the best companies that keep growing and are well run. Look, mining is basically a 19th century choo-choo train industry, and it generally, unfortunately, doesn't attract a lot of the brightest people They all want to go into finance so they can go to work for Goldman Sachs or something like that, or go into computers so they can invent an app that'll make them a billionaire overnight. I mean, who wants to play in the dirt with big yellow machines these days? I mean, kids don't want to do that any day. They're all in their basements with their computers.
So, Doug, you were mentioning that we're at really crazy high terms of the equity markets. So, are we in the eye of the storm at the moment?
From the point of view of the economy, yeah, what's happened is we entered the hurricane most recently. Well, put it this way. Since the last crisis, the government has been printing up trillions of currency units and casting them upon the water the way sailors like to think if you throw oil on the water, it'll calm the seas down. And it's worked. It's made people feel that they're much wealthier than they are. They've been consuming more. And of late, they feel like they don't even have to produce. I mean, why bother working if the government is sending you fat checks for being unemployed, even when there are millions of jobs going begging? So things that look artificially good right now. But soon, as retail prices start skyrocketing, which I think they will, and a lot of other things happen in the economy we can talk about, we're entering what I call the Greater Depression, because it's going to be much more serious, much longer lasting, and much worse than what happened during the period from 1929 to 1946.
So, Doug, considering that all the economic understanding in the general public has been falling, possibly due to all the distractions of this modern life, as you're saying, do you think that the rise of cryptocurrencies and even the Wall Street silver movement have served as tools to help educate a new generation about the importance of sound money?
Yeah, I'm all for cryptos, incidentally. I was first introduced to Bitcoin in, was it 2013, when somebody that I bought lunch for, this chap, a Belgian guy that I got in Argentina. I bought him lunch and he kindly gave me a physical Bitcoin. Actually exists. And I still have it. It's in my safe deposit box. I didn't know what to do with it. I just treated it as a collectible. But I didn't buy the argument that he made as to why Bitcoin was going to go much, much higher, idiotically. I finally got involved in Bitcoin in July of 2017, when I realized that the value of Bitcoin in particular was as a transfer mechanism, as a way to move money between individuals and across borders, especially, without using the banking system or the dollar. And that, I think, is its main thing. Other than that, it has all the characteristics of a good money. It's durable, divisible, convenient, consistent. And the value of itself is a transfer mechanism, as I said. So, yeah, I'm very into Bitcoin. And there are other cryptocurrencies or cryptos, whether they're currencies or not, that arguably perform Bitcoin's function even better. So I own some of them too. But Bitcoin is turning out to be a kind of an entrance drug. What do they call it in the drug trade? Where you start with marijuana and then you move up to cocaine.
A gateway.
A gateway drug. Yes, Bitcoin is a gateway drug to understanding economics and money. Because listening to economics as it's taught in colleges is worse than a waste of time. But Bitcoin has made people aware that, wait a minute, maybe the dollar is not the be all and end all. And it's gotten them into the habit of calling government currencies fiat currencies, which basically means they're created out of nothing. And the fact that people say Bitcoin versus fiat currencies, it eventually leads them to gold, which is the ultimate anti-fiat currency. So I think there's a lot of Bitcoin people that are getting into gold and silver because they started to get an education with Bitcoin. So I think that that's going to happen. And there are a lot of people, many of them are libertarian oriented, frankly, that have made hundreds of thousands, millions, maybe $1 billion in these cryptocurrencies. And if they're prudent, they won't want to leave all their money in a digital asset. They'll buy a lot of gold. And that'll lead them to speculating and mining stocks. So, it all ties together.
So for those that don't understand the importance of sound money yet, Doug, do you think that all the mention of inflation recently could help as well? Understanding the expansion of the money supply and its effects on the prices of real goods should get people's attention as well, no?
Oh, it should. It's funny, all of the, like the buzzword that all these people in the government and their running dog banks are using is transitory inflation. Yes, we've had a little blip, but it's going to go away. But that's completely absurd. When you're printing up trillions of new currency units, what makes them think that it's going to be transitory? The amount of fiat money creation is expanding rapidly. It's not transitory because of some passing phenomenon. It's accelerating. If you're smart, you'll plan on much higher levels of inflation in the US. But let me correct that, because printing trillions of new currency units is inflationary. But we might have a catastrophic deflation along the way, because all of this money creation is basically done in the form of debt, both through the Federal Reserve and through commercial banks. And if they don't create money fast enough, some of that debt can be defaulted on, especially as the economy slows down. And if all that debt's defaulted on, the money vanishes, prices drop, stock, bond prices collapse. So we could have a runaway inflation or a catastrophic deflation, like what happened in the 30s, or we could have both, first one and then the other, in either order, or you could have hyperinflation in some part of the economy and a deflation in others. There's lots of possibilities. So I think the only certainty here is economic chaos, whether it takes the form of inflation or deflation.
I recently had Marin Katusa on, and he was calling that crossflation, where you have hyperinflation in one sector and deflation in another.
Yes, I'm almost through with reading Marin's book, The Rise of America, and Matt Smith and I plan on having him for an hour on Doug Casey's Take, my podcast. But not anxious to do that, because his book, Rise of America, where he uses that term, I'm sad to say is not of the same quality as his previous book, which was called The Colder War. A lot of problems with Marin's proposition in The Rise of America. It's more like the decline of America. America may rise again in 10 years, but that's a long time to wait.
So in that vein, Doug, in a real depression, won't MMT and UBI come to our rescue?
Yeah, and of course that's one thing that Marin says, but these things are going to make the depression worse and longer lasting. MMT is one of the most disastrous and stupid monetary ideas that's ever arisen. Basically, it's a complicated way of justifying the government to take control of the entire economy and print gigantic amounts of money. And when the time comes, in their opinion, which is worth almost nothing to reduce the amount of money, it's by raising taxes. So MMT is not a solution. It's the ultimate problem. It's catastrophic in nature. And UBI, Universal Basic Income, well, it basically amounts to sending everybody a couple $1,000 a month for being able to fog a mirror. But you become wealthy, either as an individual or a society, by producing more than you consume and saving the difference. You don't become wealthy by paying people to lay around in their mom's basement and watch YouTube all day, or Netflix, I should say, because there's stuff on YouTube where you can actually learn something.
So we've seen businesses already unable to open after the lockdowns due to the fact that they can't get staff because entry-level workers can make more money to stay at home. So what do you think some of the unintended consequences of MMT and UBI will be?
Well, it's morally corrupting, for one thing. People think they not only can, but they should get something for nothing. But those dollars that they're being sent represent real goods that somebody's had to produce. Invest money, take risks to make the factory. Workers who do want to work, they have to be paid. And what? You get the benefits of all of this just because you happen to be born an American citizen or whatever. It's insane, A, and it's corrupting, B, very destructive. So, but I expect nothing less than that from the people that are in control in Washington right now. Not that I was a great fan of the Trump administration, and I'm absolutely not a fan of Republicans, but the Democrats in office right now amount to, they're the same people psychologically as took over Russia in 1917. These people are Bolsheviks in psychological makeup. If you want to go back a little bit further, they're the same people as the Jacobins in France in 1793. Or more recently, if you want, they're exactly the same psychological and political profile as the people, the Red Guards that ran the Cultural Revolution in China in the 60s. They're the same damn people with the same ideas, just modified in each case for the current. This is going to end very badly.
So, Doug, as we've seen lots of lockdowns due to the pandemic over the last year, you recently wrote an article pointing towards more lockdowns in our future despite the COVID panic subsiding. So why could COVID lockdowns become climate change lockdowns?
Well, like Gilda Radner used to say in her persona of Rosanna on Saturday Night Live, if it's not one thing, it's something else. It's always something. And you have to recognize that the people that go into government are people that like to control other people and think they should, think they're qualified for it. I mean, you've got people that like to control material reality. Those are people I like. And then you got social engineers, people that want to control other people. They go into government and they're really in the ascendant today. So, forgot the exact question, so I can tie that together. Excuse me, that happens sometimes.
Not a problem. How is COVID lockdowns going to become climate change lockdowns?
Of course, after some period of time, when COVID is more widely understood as basically the scam that it is, and we can talk about why I say that, because that seems like a completely outrageous statement, counter to the science, capitalize the S, the science, there's going to be something else when people realize that. And of course, for the last a long time now, 3 decades, people have been talking about global warming, which has morphed into climate change. It's a great way to control people. Hey, it's not just that COVID is going to kill everybody and carts will come by saying, bring out your dead, bring out your dead. No, let's go beyond that. It's the planet itself is going to be destroyed. So this is going to create an even better mass hysteria. And since nobody understands science generally, certainly not the science capitalized, I think it's going to take over. And of course, all the kids in all levels of school have been programmed to believe that we're having global warming, that it's part of the cosmic firmament and it's all our fault. So they'll get in back of it just robotically. And of course, all the kids that go to college hear the same thing. And you hear this from corporations and you hear it from movie stars and sports figures. It's going to be the perfect mass hysteria. And of course, only the government can organize things to put off global warming, which incidentally is bullshit. It really is from a scientific point of view. Just like COVID is about 80% bullshit. Not entirely, 80%, I'd say.
So, Doug, if you could give anyone advice about what is happening in the West right now, what would some of the ways be that you would suggest people to gain a more accurate understanding of what is happening in the world?
Well, turn off the television. Read books. That's a good idea, actually. I don't know. You've got to educate yourself, but educating yourself can be hard work. It takes concentration. It takes critical thinking. And if you do, you'll find that you're often arguing. I never argue, incidentally. That's a complete misallocation of time and serves no useful purpose. I do like to discuss, but when you even try to have a civilized discussion with somebody about these two highly politicized subjects, the deadly virus and climate change, tempers rise and they get angry. It's like you're a heretic in the 16th century or something like that, if you don't believe what everybody else believes about these things. But that's what they should do. But I don't recommend it as a path to getting along with your neighbors. In fact, you won't want to associate with your neighbors because you'll think they're stupid. And while they think you're evil and irresponsible for not believing in these two things.
So, Doug, along with knowledge, what are some of the other things that are most valuable right now that most people should be thinking about? Would a second passport or something like that be on your, let's say, top 10 list of things that you...
Absolutely, Tom, because as great as the risks are in the financial and economic worlds, your biggest risk is political. The biggest risk is your own government, who can do almost anything, as we're finding now, even as we speak. So you should diversify politically as well as financially. And that means have a crib in a second country, preferably have a citizenship or at least permanent residence options in that or some other countries. I understand that for many people who are kind of living hand to mouth in this world, stimmy check to stimmy check, that's not a realistic option. But then again, whose fault is it if you don't accumulate enough assets so it becomes a realistic option? So look, when the going gets tough, the tough get going. And throughout history, in countries where you really wouldn't have expected it, the political situation can turn and it can become very ugly for members of certain groups. And I would say that free thinkers and libertarians and conservatives are turning into a hunted species in the US and Canada both.
So, Doug, how about one's thought or your thoughts towards how to kind of protect one's finances? Obviously, on the show, we've talked a lot about having, physical gold and silver, maybe some cryptocurrency, just as you're saying, a way to diversify your risk. So, is there anything else that you would mention in there?
You've got to have gold and silver coins in your own possession. You should have more gold and silver stored offshore with a sound storer. I think that now is an excellent time to speculate in mining stocks. I think the next bubble that we're going to see in the market is going to be in these stocks, and they're the most volatile class of securities in the world, where 10-to-1 shots are not unusual. In fact, they're the norm during the bull market. So there are other things. I mean, oil stocks right now. Oil is really out of favor. Back in 1980, at the top of the oil fervor, about 30% of all the value in the S&P 500 was in oil stocks. Today, it's about 2.5%, I think. So oil stocks are hated, and outfits like Shell and Exxon are actually looking to go out of the oil business. I mean, now's the time to buy oil companies if you're a contrarian. And if you believe that oil and gas actually make sense, and they do, that's a whole separate conversation. Uranium, that's another area that I think is going to do very, very well. I've always been a uranium bull philosophically, but now, once again, cyclically, it's time to buy uranium stocks as well. So those are a couple of quick touts.
Excellent, Doug. So as we know, your latest book was Assassin. It really, points people to think critically about how they see the world. So what are the next books that you have lined up, and maybe some lessons that you've kind of tied into the overarching theme in them?
Well, in Assassin, we investigate the morality as well as the efficacy of political assassination. Looking at it as objectively as possible, does it make sense to kill bad guys that are in office? Everybody says, well, would you have killed Hitler? Well, of course. Would you have killed Stalin? Of course. Mao? Of course. But wait a minute, that's a short list. And there are many more. So we talk about what's right and wrong, about looking at that as a way to solve problems, and the techniques and the history and so forth of assassination. It's an excellent book. I mean, I really urge everybody that's listening or viewing this right now to hit Amazon and get a copy of Assassin, as well as Drug Lord and Speculator. But the next book we're doing is Terrorist. Not that I advocate terrorism, I don't. But interestingly, terrorism is just a method of warfare, like cavalry charges or artillery barrages. It's a methodology. And it can be effectively employed. Now, our hero, Charles Knight, doesn't believe in collateral damage. He's a libertarian who doesn't believe in initiating harm against other people that don't deserve it, that haven't done that first, I should say. That's what makes them deserve it. So we look at terrorism as a method of warfare, and that's going to be a very interesting book. Then after that, Charles is accused of being a terrorist, and he has to get out of Dodge. He goes back to Africa, where the series starts in Speculator, and he becomes a warlord in the country of Gondwana. Gondwana. It's a little bit different than that country in Black Panther, Wakanda. Yes, Gondwana, not Wakanda. So he goes back to there, becomes a very successful warlord. That's going to be a great book. So don't fall behind on this series. Start with Speculator, but get up to Assassin. They're enjoyable reads, and everybody likes them that reads them. And there's lots of knowledge in them, I've got to say, too.
I do agree. I read Speculator after our last conversation, Doug, and I quite enjoyed it. Do you have anything else you'd like to share with our audience before we wrap up here?
Well, right now, everything looks like it's going along fairly reasonably in the world. I mean, no riots in the streets anymore. I mean, prices are reasonably stable, going up much more quickly than they have in the past. And everything looks like it's going to hold together. But I think if we were to have this conversation at this time next year, Tom, I think we're going to be well into a visible calamity where lots of people, the talking heads on TV, are really worried. So things can change and will change rapidly over the next year. So I guess my parting words are, keep your pecker hard and your powder dry, and the world will turn. Don't take it too seriously. It's all dust in the wind.
It's excellent advice there, Doug. Of course, we can find you at internationalman.com and on Twitter at Real Doug Casey. Anywhere else you'd like to point to, Doug?
Don't do Twitter. It's true that's my account, but I don't do anything there. That and Doug Casey's Takes on YouTube. So love to hear from anybody that would like to reach out and say hi.
Excellent, Doug. Thanks so much for your time today.
Thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.